Well, of course this video had to be made. Have you seen the headlines lately? Well, what puzzles me is that when people come talk to me about bank collapses, they hardly have a clue about what banks really do, despite working in a financial institution. So it made me wonder, how aware then must the general public be about what banks really do? Where does all that money come from? And most importantly, where does all that money go, especially when there's a crisis? And that's why I decided why not dive headfirst into the realm of the banking universe and take you all with me. So today we are going to go back to the basics to get some eye-opening insights to understand if banks have, in a way, caused an existential threat to our economies. So come along, let's learn banking. What is a bank? You would say a financial institution that provides products and services related to money to all kinds of entities. Now I ask you, did you know that there are various types of banks? The ones you commonly see, JP Morgan for example, are called commercial banks. They issue loans, credit cards, offer investment and wealth management products. And there are investment banks that serve corporations, governments, and other large institutions. They work on underwriting stocks and bonds, advise and facilitate mergers and acquisitions, and hold corporate restructuring. Morgan Stanley could be an example. By the way, did you know that Morgan Stanley is planning on laying off 3,000 of its employees this year? Not so fun fact, eh? Anyway, heard of retail banks or consumer banks before? As the name might suggest, they serve individuals with mortgages, savings bank accounts, personal loans, etc. Wells Fargo could be an example. Now, somewhat similar to these are community banks that serve a particular location and its small businesses alongside its residents. Umpqua in the United States and Triodos in the UK are examples. Another similar yet quite different are credit unions. These are non-profits catering to a specific group of people, let's say employees of an organization. This is governed and owned by these people. And then there's the almighty central bank, Federal Reserve for the US and the Bank of England for the UK. The superheroes that come to the rescue when other banks reach the peak of irresponsibility after throwing away the life earnings of individuals into the seas of Arabia. It wouldn't be too far-fetched if I use the word literally here.
Unbelievable! Unbelievable!
Why the anger? Well, let me tell you about how these banks really work these days. But before that, let me tell you about how they used to work earlier. By the way, did you know that the first form of banks were actually religious institutions? This was in Mesopotamia, Greece, and Rome. Anyway, the kind of banking that we see today did not just come into existence as soon as Adam Smith introduced his concept of invisible hand. No, it took way longer than that. World War II to be precise. This was a time when many banks merged to meet the growing demand. Banking earlier was fairly simple. People wanted to keep their hard-earned money someplace safe, which was not their homes or their workplaces.
When did we get a wall safe?
Now, banks helped with that. It also got people to earn some interest while their money just sat there. But since the money of the people who were wealthy just sat there in the bank while the have-nots struggled, banks could lend some amount off of the deposits of the wealthy people. By doing this, banks would charge higher interest to those borrowing and pay less interest to those holding a deposit in the bank and profit off of the difference. Win-win-win, isn't it? Banks had also begun splitting this loan amount into tiny bonds and stocks that were worth 50 to 100 pounds each and sell them to those who were willing to invest their money somewhere instead of just keeping it in a bank that would earn them little to no interest. But now, tell me something. How do you suppose the banking system works? If you wish to become an entrepreneur, you go ask a loan from the bank of £100,000. How do you suppose that money gets into your bank? Are there lockers after lockers filled with money in the central bank from where the goblins go get £100,000 cash, pack it up and then FedEx it into the bank from where you took the loan? Well, at least that's how I thought the banking system works when I was growing up.
I'm not superstitious, but I am a little stitious.
I watched a lot of Harry Potter movies. It answered a lot of questions that I had in mind. But at least now I know that's not exactly how the banking system works. And so should you. Let me introduce you to the fractional reserve theory and credit creation theory. These theories basically suggest how deposits do not create loans. It's actually the other way around now. Fractional reserve theory suggests that a small proportion of our deposited cash remains in the bank and the remaining goes to someone who asks for a loan. Suppose you deposited £100 and someone needed 90. The bank keeps £10 and loans the rest. Now, in the eyes of everyone, there is £190 of money. 100 in the bank, 90 in the borrower's hand, even though there's truly only £10 in the bank. You think that's crazy? Wait till you hear the credit creation theory. This is the longest standing theory, the proof of which you will find in the description box. It says that the banks are creating money out of thin air. To put it in a more technical sense, they're simply typing in the numbers and saying that this money exists. When you go in and ask for a loan, they do not hand in cash to you. They simply type in the number against your name and your account number, and that's it. Now you have the money in your account. This is the reason why 97% of all the money in the world is in digital numbers. Only 3% is in cash. Are the central banks doing this? No. Every single bank in your sight has the power and authority to do this, and as many times as it likes to.
Want to know how to make this country better? It's simple. 2 words. Keep it real.
That's 3 words.
So do you now see why this is all bad? Banks are not government institutions, they run on profit making. Understand this, banks are a risk management business. Because when some of us take a loan and cannot pay it back, banks incur losses. And when that happens, we create an imbalance in the collective ledger. Now, because banks have turned to quick money making through gambling, which is also known as trading, to avoid such an imbalance, they have ended up creating an even bigger imbalance. They've done this by exploiting the power vested upon them to issue loans, by issuing as many loans as possible to gain maximum profits.
What are you?
An idiot sandwich.
Now, how is it maximum profits when you're telling me that banks calculate risks and avoid loaning to possible defaulters? That's a great question. That's where the IOUs come in. Remember how these were being sold to the wealthy as stocks to recover all the lent amount almost immediately? Obviously, what does it matter who you lend the money to? How much do you lend out? And how often do you lend this out to? When you're recovering all the money back almost immediately by stock selling. That's exactly what the Lehman Brothers did before the 2008 crash. Now tell me this, after hearing all this, do you really suppose all the bank collapses that we see today was unforeseen? In 2021, the COVID relief bill in the US got $3.5 trillion funding, not billion, $trillion funding. Where did all that money come from? Thin air, just typed away into the system.
RESTECP. Do you even know what that spells?
Respecta?
Is there no solution to this problem? Well, of course there is. There are 4 that were suggested by the Economist editor. I'll leave them in the description box for you to take a look and talk about the one that has existed for over 14 years now. But first tell me, why do you need a bank? Earlier, people needed a bank to keep their money safe. But understand this, when you deposit money into a bank, that money is no longer yours. This is not crazy talk. By law, when you deposit any money into a bank, you have legally lent that money to the bank. You cannot go around saying, my money is in the bank. That money no longer is yours, sir. So, where do you keep your money safe and call it yours? Look in your hands. You already have a safe encrypted box where you already store your passwords, all the while checking out someone on your Instagram. You can use digital wallets to save your money without worry. All the money in the world is, however, just digital numbers anyway, so what difference does it make? You want to know about how to account for any of these transactions? Well, blockchain. Other questions that might be arising in your mind after hearing this would be, what about the other services that banks currently provide us with? Did you know that Amazon provides student loans on its payments app? Did you also know that the biggest money market mutual fund in the whole world is provided by Alibaba's payment app? Euribor surpassed JP Morgan Chase in 2017. The solution that I'm talking to you about is called financial technology, or simply fintech. Of course, there have been a few fintechs that have come out to be fraudsters, but what makes you think that banks aren't? Especially after hearing everything I just told you. Look, banks have clout and power. Clout and power to do things you get to see in movies and assume that it's all just fictional, without realizing that it has been happening around you all along. Even in the 1800s, when JP Morgan created monopolies and duopolies in various industries going against Sherman antitrust laws, that disallowed monopolistic practices to promote free trade. Why? Because money, profit making. Tell you another not so fun fact. Citibank has estimated 30 to nearly 50% of all banking jobs will be gone in under 10 years. You might say, oh, they can simply go join a fintech instead. Nope. The kind of skill sets required to become a banker at a fintech firm is entirely different from a traditional finance degree. So, are fintechs a solution to our problem? Solution is a big word, but it does seem like the future is taking us in that direction. CBDCs might become mainstream because the Great Reset seems to be working perfectly as the WEF scheduled. But in my personal opinion, although nobody asked, the way people perceive value is going to change altogether. Meaning, currency and money may not hold as much value as it does today, given the technological and digital innovation will provide us with digital solution to many of the problems that is being solved with or through money, therefore making currency and money mainly instruments of exchange and nothing more, having no more influence over other aspects of our lives. And I believe those days are not very far away.